Hey guys, really happy to have Lynette Zang on board on our show today. Little bit of a short intro because she deserves it, and it's the first time she's showing. Lynette has an extended career in the market. She's actually been physically active in the market since '64, and she was a stockbroker. She was telling me as we went into the '87 crash. She started just a year before, which was the beginning of my investment career. She's also the chief financial market analyst, I'd like to say, for ITM. And she specializes in life cycles inside the currency markets. And currencies have become the new cryptos for us, with some major moves. We were just mentioning our position on the yen. So I'm definitely going to start right there. Lynette, with where we are, tell us a little bit about your take on currency life cycles and where are we in the cycles for what?
Well, I can tell you when you're talking about matching currencies together, so one currency is stronger against the other currency, blah, blah, blah. In my opinion, and actually strongly, I think that's just a divergent from what's really happening, because what's really happening is that inflation, or the loss of purchasing power, has been heating up. And when we're talking about currency life cycles, the reality is that I don't care what you're looking at. Everything has a life cycle. I can guarantee you I am at a different place in my life cycle at 67 than my granddaughter at 7 years old. Completely different part of the life cycles. And currencies are frankly no different. So we started to enter the end phase in 2002, and that's actually when I came to ITM trading, was when most of my formulas, they're just standard formulas, there's nothing special about them, other than when you're paying attention to currencies and currency life cycles, that was the end phase that we were entering. So, where we are, I mean, the Japanese yen can be weaker or stronger against the dollar and all of that. And how often do we hear about this strong currency or that strong currency? But in the meantime, when you go to the grocery store in any one of those countries, or you go to the gas tank to fill up your gas tank in any one of those currencies, it costs you more and more and more.
Absolutely. In terms of currencies, it's almost by variance, by degree. It seems more like that. It's almost like comparing two lepers and having a beauty contest, in that they've all been synchronized to have the same disease. They're all over indebted. They're all at varying degrees of illness, but they're all at an extreme level and pretty late stage cycle. I'll come back to that almost. But I know you're a strong proponent of sound money, which means you're a believer in holding gold and silver physically, and that in essence the destruction of currency, which is this debt-based system, and the debt market seems to be a big driver right now of early stage failure, in my opinion. I'd love to get your comments on are we accurate? Because after the COVID events, we said that's the end for the 40-year bull for debts. Buy the damn dip is a meme. It's not an investing strategy. People have got away with it on both equities and bonds, and the 60-40, investments strategy that everybody, sort of almost a standard off-the-shelf package for every mom and pop asset manager has done, and that the rules for the in-between years, the era of the 40-year cycle, are not the same rules for the end of cycle years. Can you tell us, starting with the debt markets, do you think we've had peak bonds and rates without having the same ability to go as far before we have a reset Bretton Woods moment, but have rates turned and are bonds a dangerous asset to be holding right now?
Well, 100%. I agree with you. And that 40-year market, a bull market in bonds, if you look at the graph, it's all based upon interest rates. And this is why I say we are absolutely at the end. It's simply because the interest rates are the key tool for central banks to regulate the rate and speed of inflation. That's the tool that they were handed back in the 80s from Paul Volcker. he ratcheted those interest rate levels, the overnight rate levels intraday to 21.5%. And so they've had a very long ramp room, and every time they've gotten into trouble, or the markets have gotten into trouble and we've gone into a recession, the answer has been to drop interest rates to inspire more debt, people taking on more debts. But the average rate they've had to drop them was 5.5 to 5.75% here in the U.S. Well, can we drop them 5.25, 5.5% now? No.
Not at all.
Right. And the European Union and so many countries, Switzerland, et cetera, have been experimenting with negative debt, which is really about attacking your principal. Since there's really no purchasing power officially, there is almost no purchasing power left in the currencies at all. Only reason why you have any is because of public confidence in the currencies. So I would definitely say that there's a big, massive hole in the debt markets. And what makes it particularly scary, and you can see it if you look on the volatility index of treasuries, which is the foundation of the global market, you can actually see when the Federal Reserve or the central banks handed over the management of the treasury market to traders. And traders only care about picking up a little penny here or there. They don't give a crap about any level of stability. And that was back in 2013. So, and we've had so many illiquidity incidences in the treasury market since then. So, I think the treasury market is done. And I do want to clarify something though, okay? Because even though I am really no, I mean, I'll go 99.9% just to give myself a little wiggle room. But I'm quite certain, actually, that the market top on all of these fiat money, so these intangible assets, I believe that is already in. What we don't know is how much tolerance the Federal Reserve or the other central bankers will have in the implosion of their, extraordinarily reinflated assets, intangible assets. And so here is my prediction, and this is just my opinion. I'm either going to be right or I'm going to be wrong, but I think that once that level of tolerance is breached, the amount of money that they created in 2020 will look like chump change. So I believe we are at the final hurrah right now. Doesn't mean the markets aren't going to go up because of all that new money. But what it does mean is that the little bit of confidence that the population still has in the guys that are driving this bus that are wrong every time. I mean, how many titles, boy, they were surprised at this number and surprised at that number. So the guys that are guiding this have no clue what they're doing. It is a big experiment, but we are 100%. I mean, there isn't even one little tiny doubt in my mind, but that we are at the very end of this currency's life cycle, and we are headed into and may have already begun the hyperinflationary depression.
I love that synopsis, and it was very detailed, and there's so much to unpack there. I did flash up the 10-year yield there for a second, and I think it took your camera share away, so I won't do it for too long. But what I was liking to show, and I point out to many people, Lynette, is that that final capitulation, when you put the log scale on, that was the events leading into March 2020, was so extreme in percentage basis that it's typical. You mentioned your macro cycle, and I love that. I consider myself to be same, that you often have a final real capitulation in end of trade. This was the long-term and I keep putting this on. I think my YouTube followers are sick of hearing this from me. We claim, to be since August 20, we were saying that was it, guys. You don't get a bigger event than stopping all the SMEs of the world, apart from the megacorp oligarchical companies that carried to trade on through that, taking all the waiters, all the pizza drivers, the restaurateurs, literally everyone off the sheet, building debt to give them the equivalent of what we all consider as UBI, even though they call them something else, stimulus checks and various others. And it does feel to me like, despite that, I'm caught like you, believing that the next major event is going to have to be, in terms of stimulus senses, even more vast than the pandemic, and that the central banking cartel is almost naturally an increaser of volatility, and they need ever greater crises to justify ever greater stimulus. So it's almost like this megaphone broadening pattern that somehow they have to find another way that is going to almost be even more extreme. But yes, I'm also in this little bit of a trap that I think they're going to turn the pain up a little higher. I, like you, don't think they have much room. I think it's a much shorter runway. We're far more sensitive, and I expect things to start going wrong earlier. But I also have this feeling they're going to keep the pain on. They're going to keep the foot down a little longer. Absolutely. To really, really crush. So, it comes forward sooner, but they won't immediately run for the fire hoses. They're going to make us beg to get the fire hoses out, and they're going to let the fire burn a little longer. And so it's kind of this, that doesn't change necessarily the timing, because we're so sensitive, things will start going wrong sooner, but they might keep the pain meter on a little longer. What's your take on those sort of contradictory elements? Does it still mean, is it this year? Is it quarter 3, quarter 4? How soon do things start breaking, and how long do they let it break? Because I'm also watching junk bond, and that's the ragged fringe of the debt markets, and HYG, which I can also bring up, was looking very, very unhealthy itself at one point and was giving up a lot of ground. Now, you may recall that they stood behind those ETFs during the COVID events. So where should we watch for the early signals? I mean, we're seeing the Japanese yen. We saw that. This is the differential now, just the small variance, because they're both so low. One is at least tightening, although it won't get far, but at least speaking of tightening and has done a tightening, and the other is actually attempting to support its exceedingly large debt markets.
If you want to talk about the Bank of Japan, have they not been writing this playbook since the early 90s, for goodness sakes? I mean, they were really the one that showed us, hey, you can have these zombie companies just hang on and on and on and on and on. And the only reason why Japan is viable at any level is because it was a benefit to the powers that be in the world to keep them as a kind of viable economy. But they've been stuck at zero forever, and they own most of the stocks and most of the I'm sorry, but to me, Japan is a joke. And I'm not talking about the Japanese people. I'm just talking about the whole policy. And so what they've really taught the world is how to promote and support zombie corporations. And now that we are at the end of this massive debt bubble, I mean, it's not quite visible to most yet. They've still done a great job in keeping things invisible. But, when you're looking at currency, I mean, there's basically 3 ways that you can value any currency. One is against another currency, and then it is just, the prettiest horse in the glue factory, but they're both in the glue factory, as you pointed out earlier. The key one that really matters the most, so you can look at Wall Street, right, which is just a contract. It's like all of these contracts that run all of this counterparty risk. What's counterparty risk? Because a lot of people will ask that question. it's the other side of the contract. That person doesn't live up to the terms of the contract. They renege, like we did back in the 70s when we reneged on our agreement at Bretton Woods to hold the value of the dollar at 35 to gold. Gold is sound money. It's the opposite side of the coin. And it's the only thing that really can protect you as we're going through where we are in this cycle. So when I say, what would I look for? I got to tell you, there are so many common signs that you see around every single currency life cycle transition. And I couldn't agree with you more that we are transitioning into the digital age. So this is much bigger than the transition that we saw in the 70s. Yeah. And I also agree with the fact, they've been moving us from crisis to crisis to crisis, keeping you completely off balance. Let's see. I don't know if you were around in the 70s because you look younger than me. Yeah. But I was a teenager in the 70s. And so I really do remember that period really, really well. And we were going from crisis to crisis to crisis. So let's look at a few of those common threads there. Well, we had women's issues. I remember women's lib. My mother said I had a sociology professor that did a lot of gender swapping things. My mother made all the boys go out of the room when I was reading some of this stuff in the early 70s, heaven forbid. And today we have the Roe versus Wade issue coming up again, and the right to a woman's body.
And I remember Mad Magazine often making cryptic nuances to race relations, and we've had the BLM movement of the 70s. I remember that, sort of police brutality. Was it, sort of a New York cop running after someone in it with an afro? And I remember that as caricatured. So there were a lot of the social unrest contracts that are geopolitical and not explicitly financial, but are clearly feeding into this turmoil of change that was going. Of course, there was we were referring to our current economic state as hyper stagflation, and of course stagflation was very much the theme. I remember people saying, we went to the moon, that we're doing the impossible, and then the impossible making it possible, and then the other picture. This was almost a meme of the 70s before we knew the word meme, and then they showed the New York streets with trash on it and saying how the possible seems impossible. That was the 70s, really grimy. And I remember my brother went to New York, and there were pushers in the street, and he was really afraid for his life. There was a crime element as well.
Exactly. And there was just a survey that was done that was completed. I think it was from the beginning of April or something like that until the beginning of June with New Yorkers, to your point. And they're saying that they feel less safe than they did before the pandemic hit. So, and we are watching a rise in crime, which is another thing that is very typical. And look at the war, right? We had the Vietnam War, and that justified all the inflation and everything that we were dealing with. And now we've got the Russia-Ukraine war. So war always accompanies this. And
it's very inflationary as well. It's very inflationary as a concept.
Yeah, exactly. And it's used to justify it. And I'll tell you something really interesting about war, because I did a study on this once. And I went back all the way to, 18, whatever it was. And there were typically about 54 years between wars. Then they would go into a war. They would hyperinflate the currency to pay for the war. They would get rid of the central banks who had a charter. So it was Ron Paul who said, it is no coincidence, and I hope I don't butcher this, but this is what he said. It is no coincidence that the era of perpetual war and the era of perpetual central banking coincided. Because before 1913, a central banker had a life of like 15 to 20 years max, because the governments always knew they were going to take us into hyperinflation. So the great experiment that started with the Federal Reserve was, number one, the era of perpetual central banking, which actually their original charter was for 20 years. So 1933 is when their charter would have been up, which I think is kind of interesting.
Which was very conveniently the Depression, which, you need us more than you've ever have.
Yep. And so they were given a perpetual charter. And the other experiment was in them it's genius, it's evil genius, but it's genius, controlling the loss of purchasing power of the currency at a rate, so controlling the rate of inflation. And when they talk about the neutral rate or the price stability rate is not what most people would define that as. Oh, okay, my prices don't change. It's stable, it's neutral. Okay, but price stability is based upon the workers asking for more money when they're getting hired. And there's your wage price spiral.
Yeah.
Right? So, when you always have to be careful about how they name things, because it's typically just the opposite of what they're really talking about. Yeah. And they want you to think in a certain way. So, I
want to complete your parallel that you did. That was very interesting. You started us down this road. Oil price, we had the OPEC crisis of the 70s into the 80s. And of course, we've got a stubbornly strong oil going into there. I remember my father carpooling because we were in Johannesburg and he drove every day to Pretoria, and he ended up with, 4 people pooling a car. And the final thing that was the unhinging of the dollar to the gold, and the eventual gold super spike that saw it run $800, which the equivalent today would be in multiple thousands. I wouldn't like to put a number to if we are to get again. So are we seeing, and will they let us have it? Part of me thinks that this time, because the 70s was still in a larger macro cycle. So we've spoken of the 40-year bond cycle, but I actually think we're at an end of an even bigger cycle.
Oh, yes,
and in the 70s, and coming to the fag end of it, if you'll excuse the phrase. So given that in the 70s, you could have traded that, you could have invested it and held it, and you would have made out like a bandit on the gold price, and many people did. And also from my South African experience, the buy gold, there was gold bugs plenty there because, of course, we were sitting on tons of the stuff as well. And in fact, the rand was twice the dollar, believe it or not, back in that era, where today now I think it's 16, 17, we're close to the Turkish lira's type value. Are we going to, in a semblance, going to have a similar outcome? But will this time it be illegal? And if they're going to come with their central bank digital tokens, and I'm taking you in because I love the fact that you also look into research. You just keep it financial. You're prepared to say the social elements and where are the Bilderberg Group, the likes of these people, the World Economic Forums of this world taking us. And it does seem like the digitalization of everything, which is the death of cash, which is anonymity, is gone. So it's surveillance finance for me.
100%.
And gold can't be surveilled and cash can't be surveilled. And aren't these the enemies that are going to need to be, well, we'll have that and look after it for you. And you can have a few 100,000 XYZ Fed coin digitized. And we'll tell you you've had your share of meat that you've bought. It's time for locust patties now, et cetera, et cetera. What's your take getting onto the more reset side? Will you be able to run? I mean, could we do all the right things and own the gold and actually literally have, you've got to hand it over by force of gun almost?
Well, you said a lot of things in this. So one thing, I want to go back to the 70s for a minute, okay? Because I was lucky. I mean, I have totally been groomed for this period of time. There's just no doubt in my mind about that. And my Uncle Al, this is why I said I started in 64. and I was about 10 then. I was born in 54. So I was 10. And my Uncle Al was a major antique dealer back in that day. And my parents and I were at his house. And he said, come here, I want to show you guys something. And we went back into a back bedroom where he had these 2 tall floor safes. Now, remember, I was little. And he said to my parents, he said, if anything should happen to me, Aunt Bertie would be well taken care of based on what's in these safes. So I turned around to look, and you could not fit one more pre-1933 gold 1-ounce coins in those safes. Knowing what I know now, conservatively, I would say that he had 3 monster boxes in each safe. So at least 3,000 ounces of gold. In 1964, when it was illegal to hold gold more than 5 ounces, except in the form that he was holding it. So now another thing happened.
Numismatic gold that actually had values that were country specific.
They were country specific, but they were also exempt from oversight, which was a huge thing that was written in 33. Treasury Secretary Wooden wanted to continue to accumulate gold. He knew darn well what they were doing with the currency. And so it wasn't just that you could hold it in that way, but I think a big part of it was also that it was not overseen. It was truly a private asset. Now, It was illegal to hold more than 5 ounces of physical gold, but in 1964, it might have been 65, but I'm pretty sure it was 64. I could be off a little bit. For the first time since 33, the U.S. government came out with gold certificates. Now, who do you think knew about the gold certificates other than those that wrote the laws, right? So now they were buying these gold certificates at $35 an ounce, even after 71, 42, 22 an ounce, right? You couldn't convert them into physical gold at that point because it was illegal, right? But do you think they might have known, the guys that were writing the rules and the laws, you think they might have known that they were being forced off the gold standard because there was a run on the US dollar? Foreign currencies, we'd been exporting inflation all over the world because everybody was tied to us. And so there was a run on the dollar to the point where there was less gold in deep storage in the U.S. than there was prior to the confiscation in 33. So these guys that are in power, that are writing all of these rules and laws, boy, I'm telling you what, it's been my personal experience and also viewership that those laws are written for them, right?
Of course.
For their benefit.
So what is our coin that will survive by legal remit? What is our position? So not all gold, obviously just raw bars that is just maximum ounces. If they do, a gold is not going to have that. Should people be looking at their specific nation? Not everybody watching this will be American, but a lot of them will. Should Americans only buy eagles and buffaloes? I'm not too sure what your gold is. It's eagles for silver, isn't it?
Well, it's gold eagles, silver eagles, gold buffaloes,
gold buffalo. Yes,
I mean, those are all monetary gold, monetary silver. So what I do and what I suggest everybody does, thank you very much, Uncle Al, is I only buy the pre-33 collectible gold. That's not true with silver, but it is true with gold because, look, they have been stealing your wealth from you from the day that you were born, right? Through inflation.
That's inflation, yeah.
Exactly. I don't care what you call it. It's a form of confiscation, like you had alluded to earlier, that they can name it whatever they want. But here's the bottom line. So I think, though, that if you look around the world, there have been a number of countries that have done a confiscation of gold, even in more recent times, like India being one in 2016 when they demonetized 85% of their currency. They also went door to door. Now, I've had people say, oh, no, they didn't, except this comes from the Treasury Secretary. So I'm going to believe them that they did go door to door and confiscate a portion of the gold that people in that country hold. And they're not the only ones. So I would think that no matter where you live, when you are inside of a regime that has been systematically robbing you of your wealth, of your work, of everything, your freedoms, which are really important, then they're not going to stop at the end and go, So
you can keep that.
Right. So I would say that it would make the absolute most sense wherever you are in the world to look at what the wealthy are buying for themselves, and that's the collectible gold coins that are they're different. Because let's just make life easy and say the gold spot market's at $3,000, and the spot market is just a manipulated contract, so cheap and easy to do. So let's just say that's at $3,000 when they decide to confiscate. Do they want you to fight it, or do they want your cooperation? They want your cooperation. They know darn well that they're going to be resetting the currency, right? So they want to get as much good money out of the system as they possibly can. So they pay you a premium. So big deal. Spots at 3,000, they say, okay, we'll pay you 5,000 to turn it in. And most people, they're blinded by those numbers, and they go, well, all right, it's only worth 2,000 or 3,000, and they're willing to pay me 5,000. Rock and roll hoochie coo, that's awesome. Yeah. Except, just like in 33, after they get the gold out of the system, then they do the revaluation.
Yeah.
So, if I
not to let it go for love nor money, no matter what you offered, even if it sounds like even real decent wealth, because the minute they give you XYZ token in the digital, they'll start inflating it away again very promptly, and it'll lose its buying power super quick, and the same cycle will commence, and they might accelerate it initially. I almost thought, actually, once they've done exactly what you've referred to, they might actually, to give longevity to the new central bank digital token and to get confidence in it initially, to get everyone to play, because there will be a lot of skepticism with the new system. Yeah. They might overvalue gold and silver to an extreme but first they'll take it off you. So they'll do the $22, and then instead of doing the $35 equivalent, that, say, for example, and I'll just throw out silly numbers, 100,000 gold and 10,000 an ounce silver.
Why in the world would you think that those are silly numbers, Francis?
Well, I think they're possible, actually, but I don't talk about them as it stretches people's brains too much. But they could do that, and then let's say the fair value is 70 or 65. They could actually have gold sell off. So once everybody holds, the few that do hold out will actually see a natural free market for a while slightly sag down for a few years until the inflation of the new central bank will actually make that 100,000 cheap again, and they will control the market again. But I just thought they might long stop a little bit and buy themselves some wiggle room, given that they know they need to see those early years of the token that they're going to issue actually not lose value to gold, actually gain value to gold. So it'll get all the gold bugs, and then they can do offers. They could say, well, you should cash your gold in, and get everybody shaken out. And then they'll start the proliferate again.
Well, history tells us something similar to that, but really actually, different. Even if you look at Zimbabwe and what happened with Zimbabwe, because typically globally on average, I don't know how many times we're going to end up here, but globally on average, you get an overnight devaluation 3 times. Now, I think we're at the 3rd time or maybe even the 4th time in Venezuela, right? So when you talk about $100,000 or $5 million or $3 trillion, right? The big problem for most people is that they get blinded by the numbers when it's so critical for you to see through those numbers. And here's
it's
an
a
easy
diminished dollar. It's almost cents. You think of it.
Exactly.
Yeah.
So back in 1971, the average wage was $9,500, and a family of four could live on one wage. Today, I don't know. I should look it up. I think it's something like 57,000.
I think that, you need to be 250. So say it was 10, you need to go up 25 times, I think. So, if you multiply $800 or gold by 25 times, you start getting to interesting numbers, 20,000 very quickly.
Oh, well, let me tell you, if they did an overnight reset right now, we'd easily be at a minimum of 15,000 overnight. And the more debt they grow when they take us into the stratosphere. But here is really the point of that. The average wage, I think, here right now is something, I don't know, let's say it's $60,000, right? A family of four is under a bridge at $60,000 a year, right? So you have to know, well, what are you trying to accomplish, right? For me, I have my mantra: food, water, energy, security, barterability, wealth preservation, community, and shelter. And I've been working very hard for a whole bunch of years now because I know how deeply I dig into stuff. And I'm telling you, there is not one little doubt in my mind, not one, that we are headed into that hyperinflationary depression. So what do you need, number one, to sustain a reasonable standard of living? Have we not heard from all of the powers that be that we are entering a food crisis? And for many people, we're already there, right?
Yeah.
But you go into the grocery store, the shelves are bare. Or you go to buy it and, in England, it's over 100 pounds to fill a tank of gas now. So the average person is going to have to make choices between necessities, not just something they'd like to have, but something they need to have. And so what I've done and what I'm still in the process of doing, and I've seriously been working on it for a very long time, is we need to be as independent and self-sufficient as possible.
Oh, you're singing my tune completely.
Yeah. Part of that goes to the community because one person can't really do 100% of everything. And the whole point of money to begin with was to enable a society to specialize.
Correct.
And period. Yeah. That was the function of money. Now we've been taught way away from any of that because they don't want you to think about you trading your labor today for a diminishing asset. So you have to put it in their game where they benefit the most, meaning Wall Street, right? So you've been taught to put your hard-earned money today into this to attempt to beat the devaluation of the currency. Oh my God. Yeah, you got to have honest money. The whole point, not the whole point, but the single most important point of gold is to hold the value over time. That's it.
Yeah.
So when they're devaluing the
real
currency,
money.
Exactly. So that's why you got to have gold. And you can do a lot of the things in the mantra with the gold, but you also need to make sure that you can eat. So, I converted my property in the middle of Phoenix, right? So I'm in the middle of a big city into an urban farm. And when the pandemic hit, then I found where my hole in my personal strategy was because there were riots not far from where I live. And I live in a nice neighborhood, right? There were riots near where my children live, and they live in nice neighborhoods. And so I ended up going and buying a piece of property and actually coming up really quickly are big, huge hoop hot houses. So it's off grid. It's big enough for me to have a community of 40 people up there. That's what I'm planning on. And I'm making sure that I have I have great water. There's lots to do. But you want to sustain your standard of living, and you need to have food, water, energy, security, barterability, wealth preservation, community, and shelter. That's what you need to sustain a standard of living as we go through a hyperinflationary depression.
Yeah. I absolutely agree with that. And I think this is the moment. There is a fear element that's coming with the tightening cycle, and we both expect, to a degree, silver particularly, but gold a little bit, to skid a little further. But it's a very dangerous thing to try pick the bottom and put a lump sum because of deliverability, time delays. We've got people that have purchased that are still awaiting for delivery, even though the price has gone down. Supply. It's a dangerous game. It should be a monthly investment that you're doing ongoing basis, and you're having regular delivery. Is it right? I'm kind of saying keep a third. We've got a non-bank vaulting service that is guys that have their own precious metals in there. They're in Panama, and they're in an American free trade zone, and they're on an airfield, the old Howard Air Base. They've got so many zombie apocalypse plans that they'll fly the stuff out and all sorts of things. But is it still right to keep about a third of it on yourself, sort of under the floorboards or mattress accounts? Or
we're talking about an emergency circumstance, right? When you need it, you need it. They can, truthfully, no matter how good a plan is, there are always things that happen that don't go along with the plan. So, yes, 100%. And, there are different kinds for me. I always start with the goals. And here, I created a strategy for myself before I even came to ITM. And we execute that strategy here. I mean, we've evolved it, made it better, and tweaked it, etc. But there are all different kinds of gold, and there's all different kinds of silver. And so everything needs to start with your goals. And when you're saying, well, should you keep a third? Well, what I think the most important piece to keep near you is your barterable position, which would include some cash that's outside of the system. And then for my barterable position, my preference is mostly silver, but then some small fraction, also some smaller pieces of gold too, for some different things. So, I think you really have to define, well, what am I trying to accomplish here? I'm trying to sustain my standard of living, but, and this is a big one, there are opportunities that present. How many times have you heard that this is a wealth transfer mechanism? Well, how about if wealth just transfers your way? What a concept. So, but I use different kinds of gold for that. But it's all collectible gold because I don't want the client. If I can hold it inside of a retirement plan, I don't buy it. And I don't buy it because it's so easy to confiscate from those plans. If you don't hold it,
and pensions are stuffed with debt as well if you don't have your own ability to select it. And those, as I say, I could see it a jubilee, a sort of multiple year jubilee. It's part of a UBI deal because pensions actuarially are absolutely broken. I think Simon Black's very good with running the numbers. I think he said one or two of your funds by 2026, even by very optimistic government employees, are going to be out of money. I don't know if it's Medicaid or wealth. So, I mean,
it was Social Security that we're talking about, and they've been running a deficit since 2013. But hey, and that's a pay-as-you-go system. So, when you look at all the problems to that, with all the people that are out of the workforce now, so they want to talk about, lower unemployment numbers, but you've had so many people, working people that have left the workforce. That means they're not contributing to the Social Security or Medicare. I mean, to tell you, yeah, I mean, 2026 would be a gift.
Yeah, and I don't think we get that far. So basically, we put a long stop date on that, on the failure of pensions. They've got to actually have introduced a UBI system which will deal with everybody, not just retirees.
Right.
Before then. And I think we are living in our time, and I think this year is a seminal year, and I think it's what you've said yourself. So how high do we get on the rates before the things start breaking? Not very, given the scale of the debt, and also derivatives, which is something we haven't mentioned, which when we look at the repo numbers that are being provided have been astronomical. I mean, this is making
over $2 trillion
look small. Yeah.
Yes, exactly. And, when you look at the interest rates, I think that even at this level with the 10-year at 3%, you can see what's happening in the volatility of the markets. So I think the breakdown has already occurred. What's going to be interesting to see is when those traders overwhelm the Fed. And I think they will. There's really no doubt in my mind, but they will, because they have the ability to do it with all that leverage and the derivatives. Oh my God. I mean, the last time I checked, so I don't know what it is now, but the last time I checked, we were looking at 610 trillion in notional value, right? Notional. 610 trillion, which dwarfs the global GDP. And I mean, the beauty part of that system and the way that they've been keeping it hidden for so long and so easily is that the guys that create it also create the rules and also determine whether or not it's a default. And I mean, so they've been able to do that, but everybody admits that nobody knows the true value at risk. Nobody. And what have we been watching over in Russia and Ukraine, with the whole world playing with a whole lot of fire by almost, we'll see what happens, but pushing Russia into a default? Because it isn't just Russia that gets impacted by that default. It's all of the banks and all of the entities that loan to Russia, and then the ones that loan to the entities that loan to Russia. I mean, it's like a domino, right? So when this huge domino falls, where's it going to end up? And if you keep in mind, I'm sorry, go ahead.
It seems like the geopolitical events have automatically been designed, and I don't know whether this is, I feel it's by design rather than by just stupidity, there's a degree of conspiring with us, that it's designed to ensure that we have the stubbornly high inflation, because you're deglobalizing. So we had the globalization era of Greenspan, where we couldn't find inflation according to him, but the assets were all inflating. And he ran very low interest rates because we reduced cost on, creating fabrics and cloths and clothing. It all went to India, China, etc. So we offshored everything. The companies got to make super normal profits, yet still were not expensive because everybody could afford it. Everyone had coats. I grew up with my brother. He had one blazer, he had one jacket. Now we throw them away after a summer and buy another one, for another. So we've had this sort of this conspicuous consumption era that has been entirely wasteful on account of affordability and lack of inflation, even though the inflation was there in the asset prices because it allowed for supreme asset valuations. And most people don't realize that that's the beginning of inflation, the hyperinvaluation of assets. And now we've got to concertina, this notion of tightening that is starting this month, Lynette, which is fascinating. I'm interested in your view on that, because I think that's almost more dangerous than the rate increases, because that's a liquidity issue as well. On your point on the debt markets, by the way, the offshore buyers fell from 62% to 51%. That's pointed to a lot of the primary dealers and local consumption for the coverage rates on 2 and 3 years that were done today. I was just reading Zero Hedge, and they've got 10 years to do tomorrow. as well. So this huge supply and how economics was held back. No one ever mentions supply and demand when it comes to bonds. You know, there've been this non-stop bull market on something that's been growing in volume, in supply, like you've never seen before. And economics 101 was supply and demand curve, price, quantity. And yet we've beguiled that whole notion. And now you have Japan essentially trying to hold up, no, it's really worth this, and buying to maintain it, putting a floor under the market to the extent that they will devalue their own currency by doing so. As everyone says, well, currencies are essentially the release valve for this fakery of maintaining a debt system, aren't they?
Well, they really are. And, you know, I'd have to agree with absolutely everything that you just said. And I would have to take that one step further because, you know, again, we are talking about Japan, who, I mean, all of these markets are so extremely manipulated. And by the way, when you were talking about Alan Greenspan, my mom used to say to me all the time, don't you think Alan Greenspan's smarter than you, Lynn? Don't you think he's smarter? And I would say to her, I hope he's smarter because he has a whole lot more influence. But if he actually believes the garbage that's coming out of his mouth, then no, I don't think he's smarter. But one of the things that he did do was formalize the manipulation of the price of gold. And I'm going to butcher this quote. But he said something about, you know, it's interesting here because what if we just manipulated the price a little bit? That would impact the sentiment. Yeah, it does, right? People see gold, which hasn't really gone down. And when you're talking about inflation, 100%, the inflation is held in those fiat money assets. And so when they started QE back in 2008, and they said, well, see, we're doing all of this and there's no inflation. Have your costs gone down on anything in your lifetime?
No.
So what is this? There's no inflation. If they can hold it at a level that you don't notice, well, there you go. You have your price stability, don't you? And you have your neutral. Yeah. Right?
Yeah, it's the uptick rate for boiling the frog. Not too quickly, but that heat slowly gets to. It's absolutely fascinating. In fact, on the gold and silver markets, I don't know if I'm pretty sure you would be familiar with this, and that's because we seem to be very like-minded. But I have a thought that I think will be answered that points to some degree of collusion. If you bought the gold market on the New York close and held it for the Asian session and then closed for the London morning fix, a useful word, fix, and then were short or flat over the American session, and you continue to just rinse, repeat this. And you have, I've looked at a chart. I took a screenshot of it. I'll have it saved somewhere, but it'll take me too long to find. But essentially, if you have the gold price that we currently have, and then you have the Asian session only, which is a parabola, and then you have the US session only, which is actually bearish, actually loses. And the actual gold price is the hybridized version of the two extremes. Which is broadly up, but not nearly as far up as the Asian session. And I wonder if there's some mafia collection money on the fact that China holds 1.3 trillion treasuries and not to dump. They hold a discount window because, in essence, we should all view the current gold and silver prices as an artificially manipulated open discount window where you're discouraged from buying in there to allow insiders that know better to accumulate at a rate whilst not moving the paper price too much. What's your take on that? Could there be a little bit, don't pull the tent down on us and you'll get paid in kind via your ability to accumulate there? Because China is a massive producer and doesn't export a single bit and imports physical. And I think they'd come out with a huge number. I don't think it'll be 25,000 tons. I think they'll shock the world. They want to, make an impact and make a real statement. It could be a shocking number that they might come out with. What's your take on all of that?
Yes, I mean, I couldn't agree with you more. I mean, it's so obvious when you're looking at it how manipulated the spot gold, spot silver prices are. And at the same time, yeah, you're 100% right. Watching central banks and those that are in power, kind of like with the gold certificate, who knew about those? So they were accumulating. I'm accumulating because I'm watching what the powers that be are doing for themselves. And frankly, who knows more about money and how they're destroying its value than central bankers? And I'll tell you something else that I find so flippin' fascinating is how much discussion there has been of late of the US dollar losing its world reserve status, and where is the decline in purchases? Gosh, where's that money going? It's going into typically non-reserve asset currencies that happen to be accumulating a lot of gold. I find that fascinating myself.
So to explain that point again, if you can. So dollars are going into other currencies that happen to be major accumulators of precious metals.
Well, other countries that would normally be accumulating dollars for their reserves, they're accumulating a lot less. I mean, even look at India. Or not India, Israel, right? Who announced not that long ago that they were buying a substantially less amount of dollars and buying more Chinese renminbi or yuan. And China's accumulating.
They also did up their euro amount, though. That was the surprise, because I didn't consider that a particularly good investment.
Right.
But well, you're right.
It's just so fascinating when you look at really what's happening underneath the covers. But you know what they knew when they created this system? They knew that people marry the legal tender of the state. And so what they try and do as they make these transitions is keep it as normal as possible so that you don't realize that anything has changed, when in reality, everything has changed.
Absolutely. It's a bit like the introduction of the euro, and across the Eurozone, everybody was paying more for everything. It was almost an inflationary step up.
Oh, it was. First they said, okay, well, we've got to inflate the currency by 17% because that'll cover everything. But I did a study on this years ago. And then what I found out is, they did that and everybody accepted it. And then if you were in, say, Italy, and it cost 2 lira to buy a loaf of bread, now it costs €2 to buy that same loaf of bread, except it took 4 lira to buy €2.
Yes, that's right. They just got a lockstep. It was almost like the gold being revalued to 35 from 22. Everyone I spoke to, and it's funny you mentioned he was Italian as well. I think the Italians got a bad end of that stick with their lira. Not that the lira was a trustworthy currency, but it's also the most indebted and the most important one. That's always, in terms of their debt, is the one that people worry about most, because it's, Spain's 7 times bigger than Greece, and Italy's twice Spain. And it's the one where they're the most unhappy. And I think they were one of the worst in terms of how those numbers broke down. They didn't do very well with the euro introduction. We are quite bearish for euro.
Part of the euro did well because they lost so much of their purchasing power without even really realizing it. And that's the part that, frankly, really, pisses me off.
It's there,
My favorite question: how many times can you be lied to if you do not know the truth?
Yeah.
And we can't count on those in power to tell us the truth because they want to stay in power. I think they need to not be in power anymore. The guys that have gotten us into this mess, they want to stay in power so they can do it all over again when they've wiped all this debt off the books, because, I don't know how this piece is going to end yet. And maybe if you found something different than I have, that'd be great. But I am trying to figure out what, like in the current system, debt is used to create money, right? So I'm saying, okay, what's the new system going to be? Because I don't know really what that is yet. The only thing that I've been able to find a few things. Number one, that the money should just be created on desire, right? So, I want to build this building, so now they can just create a whole bunch of digital money out of thin air, not backed anything. We're talking modern money theory here. But I've also seen them say that it's going to be created by debt. And if the new system is going to be based on debt, well, we got to hyperinflate and get rid of all of this debt, because it's already at nosebleed levels. It's not that it's just not sustainable. It's period, not payable. So we have to get rid of it, pay it off with dollars that have no value, so we can start in the new system again. But I'm going to tell you, history tells us when confidence is ultimately lost, and we're really this close right now. When confidence is ultimately lost, the only way they're going to get that confidence again is by putting a component of gold into the new currency.
I think a basket where a certain amount of gold, and that's why I talk about that hypervaluation, where they can almost overstate it. But we need to go through a lot of problem, reaction, solution dramas and IMF meetings and Bretton Woods Mark II. The reason I think it's going to be slightly different to the era where they took gold away from people to have, and they actively devalued debt, is because I think debt is so big now that even if you run hyperinflationary levels, you've got too much to will away, and you require a lot of time compounding. Even if you're running a negative real inflation rate, so you're paying 3% on the 10-year, and we're running 16 or 18% true inflation, you're still only devaluing it at about 13. I think they will devalue at 13, 15%. It's almost like they need to scrub so much of it off in such a short time. That's why I'm in the Jubilee camp. As someone of the Jewish faith, there's a tradition surrounding the seventh year, and a bit of a Shemitah or various aspects of that. And I almost feel it's too big a problem to run for a decade and a half, and they've got a new system they want to bring in. So it's almost prerequisite that they kill the old properly and put a bullet in the old horse's head and just say, look, you're overloaded with garbage and you're huffing and puffing. You can't do this anymore. Bang, the new horse has arrived. It's a fresh, bigger pony, and they do a transfer. So I wonder if balances, because the World Economic Forum has also referred to hacks. They might have everybody's financial balance and it all gets hacked and it's blamed on Russia or North Korea or someone with a laptop.
Don't blame it. Don't point fingers.
Yeah, whatever the case. And they say, well, your bank balance was this, but clearly all our systems fell over when this happened. And now it's time. We want to also introduce a few things like, be climate friendly, don't buy so much steak. So here's a central bank digital token, and we had you had $250,000 here and $250,000 there, and we've got some record that at the point of the hack or that occurred. So everyone's being converted. It's almost like the bail-in in Cyprus. You just got a certain amount of bank shares that were largely worthless, but technically you didn't lose it. You were a forced buyer of bank shares in bankrupt banks.
And then in the same way, the global blueprint,
a global solution. Everyone is a forced buyer of the central bank digital token on whatever they had, dollars or they had euros or they had emerging currency XYZ, and they get and there'll be zonal central bank digital currencies, but I don't think we'll have as many currencies as we have today. You just think of all the African nations. Does Senegal, Benin, and Togo, three tiny places, need to have each one a different currency? Answer, probably not. They're already on a dollar standard anyway. So we will get a sort of conversion into Fed coin and whatever they had in a bank at any one time. And then people that were the unbanked will almost be
that's a whole other topic.
Only. Yeah, they'll get very few. And I think they'll have a table, just by being poor and being born, you're going to get X. Even if you had nothing in your bank account. So I think there's going to be a social score, all of these brownie points,
that's the
you're
goal.
all going to get.
But I don't think they're going to take 10, 15 years to do this. In my studies on, most of the time, the revaluation is 1,000 to 1. So if you have $1,000 in the bank, when you wake up the next morning, you have one. I think since this is a global issue, that's another reason why I don't think they're taking 10 or 15 years to work through this debt. I think that you have a global hyperinflationary event. There is, I hate to say this piece, but there is mass depopulation because that's what happens in a hyperinflationary event. People can't afford food, they can't afford medicine, and they die. I mean, I hate to say it. So I think this is going to happen much more quickly. And when you talked about the derivatives earlier, remember, we've got all of these derivatives contracts that are out there that have to convert from one interest rate benchmark to a new interest rate benchmark. That revaluation happens automatically because the two benchmarks work differently. And that's why I think 2022 is a pivotal year, because they've already had to postpone it. They ran a test with 80 trillion, and it was a big fat fail. I mean, it went real silent, and 3 weeks later, they postponed the transition. Now, could they postpone the transition again because it's supposed to happen in 2023? I suppose so, but the more often that they do that, it lacks the credibility. And now the new contracts, because they couldn't get anybody to adopt the new system, or not anybody, but it was getting adopted much, much slower than they wanted the markets to adopt it. And so they forced compliance, at least with new contracts. And what they're hoping is that these contracts run out before 2023, or they get converted to the new benchmark by then. But it's if they don't, and you're, again, who knows? I mean, so much of the derivative market is absolutely opaque. It's opaque. Yeah. We can't see what's going on, but it's big enough to override everything else. Yeah. So, honestly, I've been doing a lot of things sooner than I really wanted to do them, because I feel like we are running out of time really, really rapidly. I don't think they can postpone this for 10 years. I don't think they can postpone it for 5 years. I think
especially with this tightening now. I think this is it. I think this is the biggest. I think this is reset. We're going to have riots. We'll have the shortages. Yep. We're going to do it all. Yep. I think it's this year. And, we've all made this mistake so many times, saying, how can they go on any longer? Right from the 80s, there was a gentleman, a South African businessman, who ran Liberty Life, and his name was Donnie Gordon, and he came over to the UK and did the big supermarkets, the mall strips. He was a very wealthy man and very smart. And, it was in '86 that he said to me, the dollar's unsustainable, or that I read his material. He wasn't a personal friend, I wish, but I remember following him, and I remember thinking, wow, so the system we're in doesn't work. At 86, I was a lot younger man. And I came around to understanding what he meant when he said that. Many, many times I thought, well, this time, this is really it. But I do actually feel that this time really is it, because I feel our knowledge and the ability to print and pretend and extend, it's just out of it. And I also think the desire to move on to the next stage is now there. That they've all practiced and released.
Yeah. I mean, I 100%, and you know why? You know why they could extend it back in the 80s? First of all, being alive in the 80s, everything was about greed is good, right? Big shoulder pads, lots of wealth. And this is what they do when they're transitioning into a new system. This is what they've done with cryptocurrencies too. They allow the masses to make lots of money or get it really visible, because then they're not looking at the real deterioration and the real problem.
and
So we
everything
had
else.
we had the 1920s, and and all of the
The
happy days
Roaring
are here again. Pardon?
The whole film of I think Leonardo DiCaprio that did the Great Gatsby, the
Yes.
roaring, very much captured the roaring 20s, and then afterwards, the death and the pool with the furniture in it, and the post-party hangover that led into the 30s. And as you say, the sort of 80s, 90s into the dot-com boom was the great, great party. And I think, that was your depression right there, 2001. And
Absolutely.
GFC was the second, and we've never really recovered from either of them properly because we never dealt with any of the things that were truncated due to central bank no pain policies. And we still have to have the night that was the Greenspan miracle Goldilocks economy, that he granted us. We have to have it is a natural balance to things, and we never really had and that's why I see hyper stagflation. Every asset class is going to go down.
With that. Yeah.
People see everything going down, and they say, "So what do you buy?" I say, "Cash." But he says it's going down at 15% inflation. Going down less is good, and buy gold.
Gold.
But it's going down. Yes, buy more of it.
Exactly. Can you have too much? No. Because we're going to have a time in that reset. Right now, we've already topped out on real estate, right? But right now, real estate is up here. Gold and silver are down here, and that's going to flip-flop. And so part of the strategy, this is not rocket science. It's actually really simple. You're going to hold your purchasing power value over here. I don't give a crap what spot does. You're holding your purchasing power intact. Then when this goes down to an undervaluation level, you actually have something to buy up these income-producing assets with. This is really so simple.
Correct.
And, as a technician, you're going to know when there's the bottom of the cup in the accumulation pattern. You're going to see the undervaluation. So you need to be in a position to take advantage of all of this. But by listening to the powers that be, they're the ones that want to take advantage of it. They don't want you to take advantage of it. And UBI, by the way, is really mostly about enabling people to not complain about the transition for a minute, but it's really about supporting corporations. Look at corporate profits. K-shaped recovery, right? This was about still, in 2008, it was about keeping the corporations alive, not the general population. And they knew that
the banking support system.
Exactly. And they knew that they couldn't get away with that again because look at Occupy Wall Street. They didn't understand what they were fighting, so they really kind of petered out, but they couldn't do it the same way. So they did it different. Is all of this a coincidence? No, none of it's a coincidence. There are no coincidences. The question is, will they have the ability to maintain control over this monster that they've created? And I don't think they will. That's my hope.
I think they're so strong. I think they hold all the levers. Facebook totally controlled. You're sharing things that are trying to wake people up. It's being shown to nobody except people that already know. You've got to be in the matrix to pull it down, but at the same time, they hold all the levers. It's surveillance finance. The biggest thing that we haven't touched on is all forms of privacy and intrusiveness that has gone beyond all levels. Privacy of speech, privacy over money. Essentially, it will. I can't help but think it's revelations, biblical. Everyone's going to have a chip in their head and a hand to have their vaccination certificates, the health records, and you're not going to be allowed to travel. They're going to make all these rules. There's going to be an inside the system and outside the system world. I unfortunately have already voted outside, but I think we're going to be treated very poorly. We'll probably be hunted down, chased, and it's a case of what else do? You do what you think is right. You determine your principles and say, here's where I stand. And I want a community of like-minded. We're going to have a good quality of existence. We're going to de-urbanize. The self-reliance you've been talking about and that you've driven on is very important. Develop own supply chain, and gold, silver is money. And go back to 100% gold, silver standard, and everybody stacks. The interesting thing because this is the dilemma that crypto has, is Bitcoin store of value, balance sheet, which is what I think gold is, and then is silver, which is more the exchange. The interesting thing is that the guys that we're working with actually get particles of silver that have been purified and are like little molecules, nuggets basically, and they can be weighed, each one, and they're all different random size, and you can buy essentially bottles of pellets by weight. And you'll have all these different sized pellets where you can combine them and get up to, $25 off. And I think I'm quite happy to go back to doing that until you can have a reliable system and go old school and analog. Digitization is the crime. And while Bitcoin and all these other altcoins are arguing about what store of value and which one is the better unit of exchange, faster, quicker, I'm thinking gold and silver. That seems to come through very, very strongly for me. In totalitarian times, the last thing I want is to rely on mobile network, internet network, where there's a government that controls all the suppliers, has backdoors on everything, and is mainly interested in extraction. And I'm asking you, the banking system's awful. I can't move anything more than 4 digits without filling in forms and explaining that I'm not a gun runner or something. What's your take on the intrusiveness, the privacy element?
Well, I can tell you that I have, unfortunately, and I have to admit it because it's just true, I have had to do a lot of self-censoring where they would take me off air. So to have these private, and I did a piece a long time ago on the blending of the banking system, which has your confidence or, has that relationship, and these private for-profit crypto, and not just crypto, but, your Facebooks, it's Meta, Google, Amazon, all these entities that have all of your habits. They know exactly how you think. They're going to put things up in front of you. I mean, it's annoying. I'm sitting there doing research and I've got these things coming up in my face. It's like, I don't really want to see that at this point, but you can't turn them off if you're going to get the research. So, what we've been watching is a melding of the two, and how much that gives the government the surveillance society is obvious, right? It should be obvious to everybody. We don't exactly. And the kids that are growing up now are really used to being in the system where they give up their privacy so easily. I'm of a generation that valued some level of privacy. And
that's what they rely on. They start the next generation. They know they'll have a stubborn old codgers in you and I, but they know they've got the next generation already in school and in everything. They're working on iPads. They know which films they're looking at, unfortunately they got them. And I think it was ironic that Steve Jobs and I think Bill Gates as well was very aggressive towards keeping their children off iPads and things like that. And I think it tells you everything about the products and the direction that it's all going.
Exactly.
On the gold coin. Sorry, carry on.
Let me just, I'll just make this point, is they actually put in addictive things inside of all of these programs to get you hooked, and you got to see more, you got to see more. They know how to do this, and scares the crap out of me, really. I'll tell you the truth. I don't want the future that I see for my grandkids.
Yeah, very strong. But getting your hands in soil, we're meeting in North Cyprus, the Turkish Republic of North Cyprus, a guy who's totally prepared to not have money and only wants to grow his own thing. So he's actually an entire opt-out of the money system. And one of the things I know, troubled black kids that have been in gangs, etc. The one mentor that was an ex-African-American footballer, he said getting their hands in soil.
Oh, it's so important.
The thing that he saw instantly decompressed them from the gangbanger culture and mentality and violence. Suddenly you've gone from beating and running and cutting and slashing to nurturing a plant, and taking pride in its progress and hands in soil. So there's so much to be recouped in going back to our roots.
Absolutely. And I
really
would also
enjoyed this.
Well, let me just point this piece out. Over all of these centuries, if you've had gold and you've had silver, you can buy your way out of a lot of circumstance. I mean, people used to sew them inside of their skirts so that they could travel from country to country during wartime, etc. And I don't think this is going to be any different. And people will notice that I wear a lot of jewelry. And big part of the reason why I do that is because you think I'd give a crap about buying my family's life with this bracelet? I wouldn't give a crap about it. It's perfect. Yeah. You know what I mean? Yeah. So we've got to have exactly. So
you can cross. What I like is because, funny enough, this is a development that my whispering voices are telling me that the nation states are preventing people from moving country-based metals cross-border.
Yes.
So if you're in Germany, if you're in Switzerland, if you're in a number of countries, they don't like it when you move and leave and take it with you, which tells me that they are not only balance sheeting that which they hold, they have a number in terms of what they suspect their citizens hold, and in their own terms of mind, they're balance sheeting that, which worries me, the confiscation element a little bit, because it's not their money, it's yours, the individual. And I know China.
That's your perception.
Yes, exactly. China was encouraging its citizens to buy gold and silver to wealth up their population. Of course, they're a massive population, and they have a habit of complying as well, more so than Westerners. So I'm imagining, and they will balance sheet that as if it's theirs as well.
100%, because you can hold those in your savings account since 2006. Yes.
Yeah. So one thing I've noticed is that it's clear to me that gold is the great undiscussed but greatly watched by the insiders, because I'm a man of many geographies because I'm arbitraging this medical totalitarianism and all these other mechanisms that I see coming. But eventually I said, okay, I think this is the safest place I would want to have my metals. And you can't travel with it. You can't take more than $10,000 worth. You need to do bullion swaps. We found means where to do bullion swaps with other people, providing you show the certification, and other people will take it off you, and you can get an equivalent elsewhere, and various other interesting mechanisms, so that you could actually conglomerate it if once you've decided where you want to see it all out.
So you know what, we're about to be testing that, but we've had clients that have done this. One woman in particular that I'm thinking about that lives in France, and using the U.S. collectible numismatic coins.
So just going to ask you on that, which is your favorite coin? Can you give us a name? So a lot of people are going to be listening in the comments. What is the name of the coin they should be buying? And so American guys, which one should they get?
It goes back to your goals. So there's not one size fits all. If I'm going to do something to make sure that I can pay my property taxes, right, then I'm might do something
more balance sheet. Not transactional, store value. So this is one they're going to hold.
Well, look, I have a high level of comfort because this is where I've lived my life, my whole life. So they're called better dated Liberties or St. Gaudens. And within that category, like I have a tendency to like to accumulate for generational wealth preservation, so legacy building. Then what I personally do is I go to the highest quality, so a mint state 65 or 66 or 64. I mean, that can vary. The mint state can kind of vary depending upon that rarity factor. But if I'm going to buy if I'm going to intentionally use it to convert into real estate income producing assets, whether down the road we see who survives, whether that's dividend paying stocks or it's income producing real estate or even some rights, some mineral rights, some air rights, some water rights, things like that, then I'll do a lower quality, but it's all broken down based upon the way these things move historically. It's not like you can't do everything with one thing, but it's kind of like the right tool for the job. So I can tell you I've used the back of my shoe to hang a picture. And you know what?
Yeah.
It worked. But when I have a hammer, it works a whole lot better. So there isn't one thing. What I would say is, what are your goals? That's where you start. What are you trying to accomplish? And then you build the portfolio around that.
The one thing you mentioned was pre-1933, because that was clearly even before the first confiscation, and it passed
Correct.
that test. I'm talking about one that you got the highest chance of still holding and not being extracted against. That's truly numismatic, can't be easily challenged. Nothing's impossible, we understand, but has the strongest case. Listen, even in 1933, this one was not confiscated.
Yep. Let's think about this for a second, right? Because again, going back to what I used before, let's say that the spot price is at 3,000 when they decide to do a confiscation. And for just your bullion, your monetary gold that you can hold inside of a retirement plan, they'll pay you 4,000 or 5,000. So you think you're okay, even when you're really not. But you can't hold those inside of the system. And a lot of those coins, I mean, there are some that go for, 8 and 9 million for 1 ounce of gold, right? Those are not the ones that I'm recommending that you buy. But when you look at the graph of what the ultra wealthy are doing, it's a very positive chart. So
that's the graph, and those are the categories I want to see.
Right, but you want to be in that category. You don't have to be at that level, because there's not really a whole lot of people that can afford $8 million for 1 ounce of gold. And personally, when I'm looking at what I'm buying, I am staying below gold's true fundamental value, which for me right now is somewhere north of $15,000 an ounce. So I stay below that because it's a hedged bet.
You want that intrinsic. You still have that intrinsically,
Exactly.
And anything your option is you're taking the intrinsic value of the option, and anything that is time value is just bonus, in essence, on the option strategy. And in the gold equivalent, the numismatic is a bonus, and you see 15,000 as a fair spot. So I kind of get that. So when we get, even if we go to fair value, at that point, you're automatically clean and good, and anything numismatic is on top.
Exactly. It's kind of like, I always like to ask myself, what if I'm right and what if I'm wrong? And if I can do something that doesn't matter whether or not I'm right or wrong, rock and roll hoochie coo. And if it costs me a teeny premium, I'll pay it all day long, because that's my wealth insurance.
Yeah, no, I get that. And that's good risk management in terms of money management I always feel there's going to be a loss of money. There's a massive liquidity contraction, and assets are going to down value immensely. So like expensive art that people have paid ridiculous sums for Picasso, that suddenly falls by a zero, gets knocked off. And instead of selling for 66 million, you can buy it for 6.6. You don't want to be chasing too fluffy a number that isn't got a very close floor on intrinsic. So it makes sense on a good level too.
Right, and in reality, I mean, it's nuanced. I know you would know how to do it. Most people wouldn't. It'd be a little too nuanced for them. But I don't care what the asset or what the instrument is. You always have to determine what's its true value, right? Yeah. Because otherwise you're just looking at the numbers that Wall Street is telling you. And one thing we know 100%, because it's happened way over 4,800 times without exception, is the true intrinsic value of the government-based fiat money, so dollars, euros, yen, I don't care, whichever one you take your pick, is zero. It has no intrinsic value. So when they do that reset, that overnight reset, they take this fiat money that has no intrinsic value and they revalue it against gold that is all intrinsic value, and it's all intrinsic value because it's used across the entire swatch of the global economy. It's used in every single area. Tell me what else you know of that can say that.
Yeah. And doesn't rot, doesn't rust, still stand there buried underground, dig it up, it's still the same item. It hasn't corroded, it hasn't got less. Yeah, no, it's a great time to be physically backed, in my opinion. It is the time. This is why we started talking about the 60-40 portfolios, and everyone goes, oh, 5% of gold, 1% of gold. And I'm like, man, 50%, 75%. It's all good. It's if you've got understand where you are, why would you want to be 5% and still hold 35% of bonds? It's a guaranteed zero. Yeah, it's a guaranteed zero. Why hold anything else that's a guaranteed not zero and will be rebased into whatever the new system is, and will transition you. This is the bridge. Gold and silver are the bridge from one failing system to one future soon to fail system, but in another generation's time. And you're going to have to play in these fail systems, but you can have a golden bridge that will carry you over, and gold is that.
Right.
Yeah.
And I used to think it is fascinating, and I used to think that when we went into the new system, and you'll know when they're done when there's a component of gold in it. They'll do a few things before that, but you'll know that they're done when they put a component of gold in it. And I used to think after that happened, then there was a certain portion of my gold and silver holdings that I would convert into the new currency. But that was before I saw that they were taking us into a digital world. And, I read those IMF reports. And as the government says, with this new digital currency, they can do lifetime taxes. So in this country, I'm not sure about where you are, but I know in this country, you got to pay your taxes on your gains, but you got to take your losses over a long period of time. So if the government has the ability to do lifetime taxes, pardon me, you're screwed. Number two.
Well, real time. Yeah, real time taxation where they take it almost daily on income. The minute you get that income, it's assumed that it's part of your normal practice, and they take real time taxation. I always mention, and I drive people potty about the double a dollar 20 years in a row, and you get over 1.2 million. And I think if you pay 35% tax and you double a dollar, and you pay at the end of the year, not real time or monthly, but you pay at the end of the year, and then you double the net after tax again, you get around about 36,000 odd. And I've not got the maths always perfectly, but it's between the 20 and 40 grand, and it varies depending what tax rate you use slightly. But I've gone with 35%, and the difference is huge. Now, when if they get the ability to real time tax you, it's a bit like the actuarial, because I studied actuarial science. Instead of paying, your interest only accrues at the end of the year. If they get it right down to monthly, daily, till it's literally by the second, your tax effect, they're just keeping you on the wrong side of a very fastly compounding interest equation.
Yes.
That is basically the system. The big steal is you are put on the wrong end of a compound interest equation. Whether it's a tax taking you owe us on account of income, whether it's a tertiary lending system, but the whole thing, and it's Warren Buffett's, the 7th and the 8th grade wonder was compound interest. People just don't conceptualize at all that is the game. You've got to put yourself on the other side, because everybody who's collecting from you wants it super quicker, faster, earlier, more efficiently, and the digital surveillance system is going to do it for them. They can put a bot on it and it'll eat it as soon as it comes in.
Exactly. That's easy.
At least previously you'd have a year, plus you could delay a little bit, and then your tax return was in. You might have had a stock market that did 18% during that period, right. Which you would have made 18% on the money that you ended up having to pay them. But now it's super compounding, and the whole surveillance element is just unbelievable.
It is. And for central banks, they need this digital system because that gives them the results of their policy in real time. And the end game is they said this, these are their words, not mine, is that there are no limitations to how low we can push those interest rates. So they want you to go out and spend. You're not doing it fast enough. They push a button. Yeah. And you're sitting there watching your bank account evaporate and you haven't done anything. You're going to go
also,
out. Also,
if they decide that there's too much inflation, they can just give everyone a haircut and say, there, you'll spend less. It's proportionate. We're all in this together. All the communist phrases, the very, very communist phrases of, solidarity. We're in this together, giving and taking back in a uniform manner. And we all just become part of their ant farm experiment in kibbutz communism. It's crazy. Absolutely crazy.
And that's why you need to have some level completely outside the system. And don't wait. Yes. That's one thing that I've noticed, just of late is that the scarier that it's getting out there, then people just freeze.
People freeze.
Don't freeze. This is not a good time to make that choice. This is the time to get prepared so that no matter what happens, you and your family and whoever else you choose, you're okay. That you can weather 100%. This storm. You cannot get out of the way of it, but you can get into a position to not just survive it and thrive through it, but also to be in a better position fiscally than you are as we're entering it. And that's the choice.
When they acknowledge the fullness of the value or even overshoot, as I've suggested, your wealth, you'll finally realize the wealth that the fake paper market has suppressed in the metals market if you're a big metals. So, and I'll add another component because so many people are hitting pharma, which is one of the worst things you can do for mental health reasons. Taking action is very, very good for the mindset. Being frozen and anxiety is paralyzing. It's loss of power. It's powerlessness. You become a fawn of media. You need to know the latest news. Switch all that garbage off and take action. And when you start doing that, community, which is something we run, it's clearly something you run, self-reliance and taking action. And this is your psyop. This is the era you're born into. You are a woman of these times, certainly, Lynette. And there's a few of you. I've also spoken to Danielle DiMartino Booth, who worked for the Fed in Dallas as well. I said, you are the ladies of this time, but so are we all. And we're all part of this experiment. And you can come out better. But you have to take action, and you have to realize that things are not what they seem. You have to call the bluff. This is a game of poker where they've been lying to you all the time. Call the bluff, call for gold, and wait for the uptick. And hang on to it for dear life.
Exactly. Yeah. And you vote with your purse. So if you put it in the systems where they're guiding you, where they call it nudging, well, then you're going to lose.
They want you where they can take it back. Yeah.
Right.
100%. Excellent. Lynette, if people want to engage with you, and thank you so much for that numismatic point of value, how do they do it? How do they find you? Give them the rundown.
Well, we have a great website, itmtrading.com, but I'm also very prolific on our YouTube channel, which you can either search it through ITM Trading or Lynette Zang. And we just recently opened up Beyond Gold and Silver for all the rest of the pieces of the mantra. So on the ITM, I'm talking about all the kinds of things that we talked today, all the macro and what's going on and helping people recognize these patterns so they can make educated choices that put their best interest first. But, you do need more than gold and silver to survive this. You need the food, water, energy, security, community, and shelter. And so we're building a library, very comprehensive. So wherever you are in that, you're just a beginner or you're seasoned, either way, you can come there for the help that you need to get prepared. Because we need to be prepared, and we are running out of time.
I've regularly said that, they made a mockery of prepping by sort of running TV shows and making it a bit of a thing. But we are in the prepper times, and everything has to be prepped. Boreholes are premium, land with boreholes, good soil. All of these things are real premium. Lynette, Zang, thank you so much for coming on. I've really enjoyed this conversation.